Hey guys, Airbrush Wiz coming at you, aka Kevin. You're on my YouTube channel, Coding with Kevin. I assume you got here because you are entering the Trading Challenge. Very excited to have you guys here. This is a cool strategy that Jim and I have been working on for the past couple months. And it's something that you can use with the Trading Challenge, and it's also something that you can use with the daily watch list. But we're just mainly going to focus on the Trading Challenge, which is going to be trading Apple. Jim and I have found a pretty high success rate with trading Apple. So let's talk about it. What you'll notice is there's going to be daily targets. So Jim is going to post a image of some resistance and support levels, as well as where to enter, right? So today, Apple, the resistance was at about 126.60, and its support was that was pretty low for it. It was more around 124.60. So the strategy, however, is you're going to want to have a TD Ameritrade account. You're going to want to fund it, and it's going to want to be a cash account. The second thing you're going to want to do once that's all taken care of is get ThinkOrSwim. It is TD Ameritrade's desktop trading platform. It's the only platform that I've found that allows us to do this trading strategy. I think Webull might. I'm not sure though, but ThinkOrSwim, that's what we're using. I hope you use it too. So the strategy is we're going to click on this trade tab. Apple here is our ticker. You can enter anything if you're new, like Tesla or Apple, right? Or AAPL, my bad. And we're going to see everything, all these strike prices and everything here, okay? Now, this strategy is done pre-market. So all of this is going to be just neutral colors. It's going to be just gray or whatever. And they're going to have sometimes odd pricing. That's because the stock price has probably moved from market close where all these got frozen. Right now you can see that they're green and red, but that's because the market's open while I'm recording this video. The only reason you want to pay attention to the prices is because when we start creating these orders, it will start reserving capital, meaning that if your account has $1,000 and let's say each of these contracts pre-market are maybe $200 a piece, you're going to want to keep an eye on that because you might not want to do 3 contracts at $200 a piece of both a call and a put, right? You might want to do 2, or you might even just want to do 1, right? It will change once the market opens, and then your capital reserve will be reflected. But initially putting in these orders pre-market, you need to be aware of that. So what we want to do, we're going to want to create a template first. So over here in the ask column of the call side, we're just going to click that, okay? Over here, we're going to go ahead and click first triggers one cancels the other, right? That's what OCO stands for. This green color is our purchase of the call option. Here in the link section, just right click and create opposite order and do that again. So now these red sections, these are going to be to sell that contract, okay? Decide right now how many you want to do. Give it some thought. Maybe start out with just 1, maybe start out with 2. Personally, I'm doing 3. So I'm going to just create my template with 3 in mind. So now you just saw I had to click for the sell contracts. I had to click down. It's essentially a negative number, right? So math. Next, we want our orders to be market orders. Now you might be like, Kevin, why do I want to do that? That's a bit risky. Well, yes and no. First, if you're using this to trade the daily watch list, I would not recommend this strategy for anything that has a bid-ask spread that's wider than 10 to 15 cents. Caterpillar is a great example of that. You might see it on the daily watch list frequently, but it has a wide bid-ask spread, and with the strategy I'm explaining right now, it's usually not a good risk to reward ratio. For Apple, we can see, look, it's got a 2-cent spread. I don't really care about shaving off a couple cents to get my entry. What I care about is getting the entry and then also triggering the exit. If a stock is moving fast, limit orders have a high chance of not being triggered. Like we've tested this. We've had our limit orders just get completely blown past, whether it's to sell the contract if it's not going in our favor, or if it's even to take profit. So we decided market orders are going to be our best way to get in and out of the trade as quickly as possible. This helps us keep our losers small and our winners big. So now that we have this, plain market order may not be part of an OCO group. Don't worry about that. That's fine. Now that we have this, we're going to go ahead here and click our Save Custom Order Template. This is going to save you so much time. I'm going to call it AAPL 3 contracts. Okay, you can call it whatever you want, but that's just what I'm going to call it for this example. Now, I'm just going to go ahead and delete all this. Now, when it's pre-market, you can go ahead and right-click. We've got our target entry. We know which strike price we're going to target. Right-click, go into Buy Custom, and you can literally see your templates right there. Click it, boom. We just saved so much time right there. All right, so now the strategy. This morning, the resistance level for Apple was at about 126.60, okay? And the support for it was at about 124.60. So pre-market, you want to keep an eye on where the stock price is. It was hovering right around 126 this morning. So getting in was a little risky. We can kind of see right here this morning, it was already hovering around 126, 10, 16-ish. This play this morning was going to be a little bit risky of an entry point, and we can even see that it spiked up all the way to 126.40 and then all the way down to 125.69 in one candle. And then the next one dropped all the way down to 125.48. So have a little bit of attention pre-market to where this is going to be at. But the strategy is, if 126.60 is our target, we want to back off of it, it's our resistance level. We want to back off of it 50 cents. So our entry is going to be 126.10. Okay, so we've also found that Apple has 80% of the time, Jim has great metrics on this, 80% of the time Apple will hit a 40-cent move in the direction we want. So if our entry is at 126.10, our take profit is going to be at 126.50. And then we always have a 50-cent trail stop. Okay, so when we go over here to our template, we're going to go ahead and see this little gear icon. We're going to click that in our green purchase. All the stuff at the top is going to stay the same. And over here, if you just click on the symbol, it automatically fills in Apple. And honestly, if you just click over here to the trigger, it fills in the method. So our entry is going to be this. These two are very important. It's going to be below or equal to or above or equal to, okay? So our entry for our call is going to be above or equal to 126.10. Save. Now these next two are going to be, once this is purchased, once it's triggered, right, we want to set up a one cancels the other to sell the contracts. So I always put my trail stop in first. So Apple trigger trail stop of minus 50 cents. Okay. We do a take profit of 40 cents because we've seen a high metric of that being successful quite a bit of the time. Like I said, about 80% of the time. But we also have a trail stop because this morning, for example, let me share it with you. This morning, for example, on TradingView, I note that 127.29 is a pretty significant resistance for Apple. We've seen it happen for the past couple days where it hits it, it goes a little bit above, goes below, goes above, goes below. So I just identified that as a kind of short-term resistance. So my play today was so if it was 127.30, right, I backed off of that by 50 cents. So my entry today was 126.80. It went, if I had a 40-cent take profit, it went all the way up to 127.19. So 39 cents. Sorry, I'm just adjusting this real quick. But it went 39 cents right here, and then it fell all the way down. Okay. So if you have a trail stop and it misses its target, that's okay, because the trail stop would have triggered maybe 10 cents below our entry. It would have been maybe a $5 loss. That's why we do trail stops. We keep our losses small and our winners big. If it had gone up one more penny, that would have been about a $45 to $50 win. So trail stops are our friends. So that's why we use it. And then, so finally, our entry point for this example is 126.10. Our trail stop is 50 cents. And then we do here, Apple trigger at or above 126.5. Save. Now, since this is pre-market, when you hit confirm and send, I never place a trade without confirming that these have been entered correctly. And you'll notice sometimes the trail stop I don't know what happens. Sometimes it just doesn't get entered correctly. Always check this. Always check this. You will be so frustrated if you forget to check this and something goes wrong. And then hit send. I'm not going to, because this is just an example. But now let's do a put. So our target this morning was 124.60. So we're going to back off of that by 50 cents. So that means our strike price will be 125. So we'll go here, right click, buy custom, Apple 3 contracts. Sweet. So our purchase of the put is in green. Our sells of the contract is in red. Now we're going to go over here, symbol, trigger. We're going to do the at or below, below or equal to, my bad. So 50 cents off of 124.60 is 125.10. Okay, so we're going to purchase our put at 125.10. Then we're going to have our trail stop, symbol, trigger, trail stop. Now you'll notice I'm going to put a minus as well for this trail stop. every single time, always do minus 50 cents. Because it's going to be in the direction of against us, right? So against us is a negative 50-cent move. Hit save. And then finally, our take profit is going to be at or below 124.7, right? Because 40 cents is our take profit. So we hit save and we confirm and send. We can see, okay, this is our mark. Our trail stop is, you can see here it got changed to a plus symbol. TradingView just does that, but when you're putting in the initial trail stop, you have to use a minus 50 cents, and I'll show you why. If we leave it as plus 0.5, watch, as soon as I click off, it goes back to 0, right? So again, if plus 50, if I click off, back to 0. So for some reason, its software is built to only recognize the negative symbol, but then when you hit confirm and send, it will flip it to the right direction. So that's that. Now, if you're going to use this strategy for the daily watch list, I want you to keep in mind the bid-ask spread. We can see here with Apple, if it might have a 3-cent bid-ask spread, right? Down here it has a 1 cent. That's why we use market orders for this, because it doesn't matter. Shaving a couple cents off isn't our priority. Now, sometimes you're going to see symbols like Caterpillar, where it has a 14-cent spread, or even this one might even be a bit larger. I would not recommend using this strategy for symbols that have a wider bid-ask spread than 10 cents, because a 40-cent or a 50-cent take profit it just doesn't justify the risk of making up enough to just equal the ask, right? So like if we took this one, which is in the money already, and we did a 50-cent take profit, we would essentially break even, because we would get our contracts purchased at the ask price, but then if we wanted to sell them, they would be sold at the bid price. And if we're doing market order, we can see the bid is much lower than the ask. A 50-cent move would essentially make it equal to the initial price we purchased for. So I don't recommend using it for anything with a wider spread than 10 cents. But with that, I hope you guys learned something. We have found it to be a very successful strategy with Apple. About a 70 to 80% win-loss ratio. So we've won more times than we've lost, and having that trail stop in place is really a good idea. And perfect example of what happens when you don't have a trail stop. So we can see today I'm down $136, okay? So this strategy earlier for the call, I was testing something. I did just a 50-cent stop loss. So what that means is our chart, if my entry was 126.80, my stop loss was a static 126.30. Okay? So rather than a trail stop, just a 50-cent stop loss. Now what we've found is if we do that, the loss is almost 2 days worth of wins, because even at 3 contracts, some days will be maybe $40, some days will be $60, right? It kind of hovers around there. Today, with just this static 50-cent stop loss, on that one trade alone, I lost $78. That's literally almost two days of wins. So we don't recommend having a static stop loss. And this next trade here is actually having a trail stop. So this was a put that I played. If it went down to, I did exactly that, the 125, what did I have it on? Let's see. It was a purchase of at or below 125, right? So I didn't do 125.10, I just did 125. And we can see that it went to 125, and then that was support, which is fine. It retraced. It went down to about 124.91, which means that if we had a 50-cent trail stop, it should have been triggered at 125.39, if I'm doing the math correctly. And it obviously like went up and hit it right about here. Yeah, exactly. So if I'd have had my trail stop in earlier, and I had my entry at 126.80, it went all the way up to 127.19. I would have had my exit at 126.71, a much better loss than 126.30. So all that to say, good luck. We're excited to have you on this trading challenge with us. Reach out to Jim or myself if you have any questions, any issues. We're here for you, and I can't wait to make money with you guys.